Welcome back to Morning Markets on Monday, the 7th of February. On screen, we can see the key market moves from Friday. Key takeaways, we had positive moves in global equities led by a modest recovery in the US. Bond yields were higher. UK 10-year gilt yields were up to 1.41% on the day, and the US 10-year Treasury at 1.91%. The US dollar was also stronger on the day. In terms of key data points, the one area which I want to focus on today is the US employment landscape. On Friday, we received the non-farm payrolls and the unemployment rate. The non-farm payrolls demonstrated that 467,000 new workers entered the workforce in January. Analysts were expecting that number to be around 150,000, so it was an incredibly strong reading. At this stage, there are 6.5 million people unemployed in the US, which is down from 10.2 million this time last year. So we're seeing a recovery come through. In terms of unemployment rates, the unemployment rate is currently 4% in the US, which is moderated by around 2.4% over the year, and it's taken us closer to that pre-pandemic level, which was around 3.5%. Employment growth continues to be very strong in the service sectors, so areas such as hospitality, leisure, transport and warehousing. At this stage, demand for workers is still very strong. There's still around 1.7 posts available for every available worker within the US. And within that, we're seeing quite a bit of movement within the labour market. So we're seeing workers moving from one job to the next to benefit from higher wages. So average hourly earnings was actually up 5.7% month on month in January. Biden was cited saying that America's job machine is back, it's stronger than ever, and America is back to work, so a very bullish assessment. Employment is a very important factor as it feeds into the Federal Reserve, so the US Central Bank dual mandate around employment and inflation, and therefore the strong readings are giving them encouragement that they are on track to taper monetary policy as we've been seeing over the last couple of meetings. Hence, the moves which we've seen in the bond yields over the last few days. So that's bond yields moving higher in response to the encouraging growth, inflation and employment data. In terms of the week ahead, we've got the US inflation report. Analysts are expecting this to sit a little bit higher in the coming reading, given the increase which we've seen in energy, in food, in shelter and wage costs. But as we've discussed many times, we're expecting this rate to start to moderate as we move through the year. On the earnings side, 75% of those firms which have reported so far in the US have beat expectations, so we're still seeing very strong earnings reports coming out. This week, we'll hear from Coca-Cola, from PepsiCo, from Twitter and Pfizer, to name a few, so we'll keep you up to date on that front. In Europe, we'll get some estimate GDP prints, and across in Asia, China, traders are back to work after the week-long Lunar New Year holiday. Overnight, Chinese equities were positive. From a data perspective, one of the key areas which we'll be looking out for is the Purchasing Managers Index print, so the PMI print. We'll keep you up to date on all of these factors through the week, so we look forward to you joining us then. Thank you very much for watching.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.